Hi, I'm Louis. Gas Malaysia, a stock with rising share price. Is it worthy to be invested? Recently, the invasion of Ukraine by Russia has caused a sudden spike in oil and gas prices. This could have a significant effect on the oil and gas industry. Figure shows that since mid of May, Gas Malaysia's share price has risen significantly. Let's take a look at this company's financial statements analysis to find out whether it is worthy to be invested. Profit and dividend distribution. Between financial year 2012 to 2021, Gas Malaysia's revenue has been on an upward trend. On the other hand, its profit before tax and profit after tax were not growing significantly. However, if we zoom in to view the profit before tax and profit after tax trend, it is shown that Gas Malaysia's profit before tax and profit after tax were actually growing over time. This is a good sign. Likewise, it is shown in this figure that between financial year 2012 to 2021, Gas Malaysia's earning per share had also been on an upward trend. During this period, dividend distribution was very consistent. The amount of dividend also increased in tandem with the rising earnings. Between financial year 2012 to 2021, Gas Malaysia's dividend yield was on an upward trend. In financial year 2021, Gas Malaysia's dividend yield reached 6.6%, which was significantly higher than fixed deposit rates, as well as higher than the FBM-KLCI's average rate of 4.5%. Between financial year 2012 to 2021, Gas Malaysia's annual dividend payout ratio has been around 100%, indicating that the company is paying out almost all of its profits as dividends to shareholders. In financial year 2021, its dividend payout ratio reached 91%, which is one of the highest rates in Malaysia's stock market. Management efficiency. Between financial year 2012 to 2021, Gas Malaysia's net profit margin ranged between 3 to 8%, which is relatively low. Between financial year 2016 to 2021, both of Gas Malaysia's return on assets and return on equity were on an upward trend, indicating that the assets of the company were utilized effectively to bring in more profits. Stock valuation. Between financial year 2012 to 2021, net tangible assets per share of Gas Malaysia was increasing slowly, indicating that the company has been accumulating assets gradually over time. On the other hand, during this time period, Gas Malaysia's share price was fluctuating and unstable. It appears that Gas Malaysia's share price is not directly linked to the assets value of the company. By comparing its share price and earnings trend, it is shown that while Gas Malaysia's earnings were increasing over time, its share price was fluctuating. This shows that the share price is also not directly linked to the company's earnings. Price-to-book ratio is calculated by dividing share price with net tangible assets per share. Lower price-to-book ratio, especially lower than 1, is preferable. This shows that the share price is undervalued and has room for upward movement and worthy to be invested. Recently, Gas Malaysia's price-to-book ratio has been on a downward trend, indicating that its share price is becoming cheaper over time. Although now that the share price appears to be cheaper, the price-to-book ratio is around 3 times, which shows that the share price is still at a relatively high point. PE ratio is calculated by dividing share price with earning per share, which shows the ratio between the share price and the earnings of the company. If the ratio is very high, it shows that the share price is at a high point, which is not worthy to be invested. Between financial year 2012 to 2021, the PE ratio of Gas Malaysia has been on a downward trend, showing that the share price is becoming cheaper over time and more worthy to be invested. The market cap is calculated by multiplying share price with the number of shares. Hence, the higher the share price will contribute to the increasing market cap and overall valuation of the company. In the last few years, Gas Malaysia's market cap has been on a downward trend, indicating that investors are having a lower valuation on the stock. By considering the number of shareholders holding the stock, it is shown that between 2019 to 2021, the number of Gas Malaysia shareholders were increasing steadily, indicating that this stock is attracting more interest from investors. Gas Malaysia is also well supported by institutional investors. Its largest shareholder is Anglo Oriental Annuities, holding 30.93% of total shares, followed by Tokyo Gas, Petronas Gas, Lembaga Tabung Haji, and so on, also holding significant quantities of shares. Financial management and stability. Between financial year 2012 to 2021, it is shown that Gas Malaysia's capital expenditure spending is on an upward trend, indicating that the company has been investing significantly in property, plants, and equipment in order to expand its capacity and reach more customers. Between financial year 2012 to 2021, it is shown that Gas Malaysia's equity was almost constant, while its debt level has been increasing over time. In the last few years, its equity to liability ratio is below 1, indicating that its debt level is relatively high, which is a risk factor that could be detrimental to the company's financial stability. Between financial year 2012 to 2021, it is shown that both of Gas Malaysia's current asset and current liability has been on an upward trend. Overall, its current ratio has been mostly above 1 or close to 1, indicating that the company is having enough funds to pay off its short-term debts. Between financial year 2012 to 2021, Gas Malaysia's cash flow has been on a downward trend. If the cash flow amount is too low, this could also be a risk factor that affects the company's financial stability. Investors should pay close attention to this point before making any investment decisions. By considering its cash flow per share, it is shown that in financial year 2021, Gas Malaysia's cash flow per share was RM0.03, which is around 1% of the current share price. In conclusion, oil and gas prices are frequently influenced by major events happening around the world, such as the COVID-19 pandemic and the recent Russian-Ukraine war. The fluctuations of oil and gas prices could also directly affect the earnings of companies, which in turn induce significant share price movements. Hence, investing in oil and gas industry could be quite risky. Overall, Gas Malaysia's fundamental aspects are strong, as its earnings are rising every year. In addition, its dividend yield has also been increasing in the last few years, which range between 4 to 7%. However, its cash flow level is low and its debt level is relatively high. Now its PE ratio is at about 13 times. Do you think it is worthy to be invested in? Also worth mentioning is that Gas Malaysia's main business activity is the development of gas pipelines to supply natural gas to its customers. Figure shows that between year 2018 to 2021, the total length of its constructed pipeline has been increasing, allowing it to serve more customers and increase its earnings. Also, Gas Malaysia's customers include number 1, industrial customers which engage in the manufacturing of rubber gloves or other consumer products. Number 2, commercial customers such as hotels, shopping malls, and hospitals. And number 3, residential customers. Figure shows that Gas Malaysia's main customers are natural gas users from the industrial sector, which makes up 99% of its sales volume. In particular, rubber gloves manufacturers are the main industrial customers, making up 33% of the sales volume. Up until now, Gas Malaysia has been the only company providing similar services, which makes it a monopoly in the market. However, in 2022, the changing government policy will be opening up the market for competitors to join in, which will pose a new set of challenges to Gas Malaysia. In order to adapt to the changing business environment, Gas Malaysia has been diversifying into renewable energy ventures. For example, palm oil mills produce biogas that Gas Malaysia could deliver directly to its customers or injected directly into its pipeline network, which could potentially be a new revenue stream for Gas Malaysia. That's all for today. Feel free to share your comments in the comment section. See you next time. Bye! The content above is for sharing and reference purpose only. It is not an investment recommendation. Investors are encouraged to carry out further research and analysis as well as follow up latest update information before making any investment decisions.